Welcome all at this webinar about trade finance strategies. And again, we went over 100 subscribers, so very happy about that. It shows that that we are doing something that interests the Treasury community. So great, welcome all. So people from many continents. As a matter of fact, I think Enno is also not in Europe right now, so that's a sign we are quite international here. I saw experts, I saw laymen, so I think it's quite diverse. I'm Pieter de Kiewit. I will be moderating this session. The session is hosted by Surecomp and TreasuryXL. And let me briefly also inform you about the people here present. So from Vanderlande, Eddy is here. Eddy has a background in banking. A solid background, a lot of export finance there, and he moved to the other side of the table to Vanderlande about 7 years ago. It's not a well-known brand for many of you, perhaps for others it is, but I think a lot of people have taken their luggage from the conveyor belts of Vanderlande at airports. That's one of their many services they've got. Then Niki went in opposite direction. He first was working at the corporate side at Cisco, Philips, and others, and then moved into the more entrepreneurial side, treasury entrepreneurial. A lot of innovation going on, and he is taking a prominent role in that. Has a strong risk expertise, and last but not least, Enno is here on behalf of Surecomp. He learned a lot at McKinsey and Commerzbank. And at Surecomp, he is bringing Surecomp forward from a strategic perspective in trade finance. So he knows a lot about what corporates enthusiast and what's going wrong and what's going good. So looking forward to his input. Some practical aspects before we start. We will focus on the strategic and the tactical. We don't go into the nitty-gritty. Then you should best call Surecomp directly. They can tell you in detail about their services. Furthermore, it's not only about large project commodities, but it's in trade finance high over. If you have questions, use the Q&A, and then we'll try to answer as much as possible. Unanswered might be answered afterwards. And we've got 45 minutes, so I will be strict in that. So 45 minutes, then we'll stop. But the session will be recorded, so you can check out later on what it's all about. So that about the introduction. As mentioned, the audience is a mixture of members of large teams, but also one-man shows. So I suggest we go from the high over more into detail. And also let's go talk about processes, because our polls and research at TreasuryXL show that processes is the biggest bottleneck in trade finance. So Eddy, to first get a bit of a feel about trade finance and Vanderlande, can you describe two typical projects where trade finance was an important solution in what Vanderlande is offering?
Yeah, well, at the moment we execute our projects in over 100 countries. So we have quite a diverse clientele where, either in airports or in parcel companies where they order a system from Vanderlande, a parcel sorting system, for example, you would typically see an advance payment guarantee for the advance payment. You would typically see a performance bond and maybe even a warranty bond or a spare parts bond or whatever. But I think the performance bond and the advance payment guarantee are most common in our business. We stay away from letters of credit, for example, because if you are installing a large airport baggage handling system, you might have 200, 300 shipments, which makes the case for checking all bills of lading quite the challenge. Mm-hmm. So we typically stay away from that, but we have, we can provide guarantees. to the companies that we deal with.
Yeah, so it's very much counterparty risk in a way that works for you and them.
Yeah, well, it works because somehow people, we are part of TICO since 2017. We have been acquired by Toyota Industrial Corporation that has a rating of A+. So, you know, but our customers still want a bank guarantee from a bank that might have a lower rating than our own mother company.
Yeah,
which is fine.
Yeah.
But you know, that's the way it is.
yeah, yeah. It's based upon history, and not everything might be rational, but it is what it is. What it is.
It is what it
But
is. Yeah.
perhaps, Niki, you can elaborate a bit on that because I know you as kind of a risk mitigation expert. What kind of other typical examples would you add to what Eddy is mentioning here?
Yeah, so what Eddy's mentioned is interesting because you use these kind of products guarantees, LCs, to obtain an individual objective, right? And it doesn't always make sense, but quite often you need to do it. A typical one, I think, is a bid bond, where in order to get a deal, you need to issue the bond. But you know, does it make sense for someone who's going to pay you that you have a guarantee towards them outstanding? I'm not sure, but again, you just need to get over it, do it as fast, as efficient as possible. But where it becomes a bit more and more interesting, I find, is if you look at it in a finance trajectory. In my experience, especially with slightly smaller companies than the really big one, the financing trajectory is very closely linked to the whole supply chain. So it starts from getting orders in the beginning of a season from your customers. Once you have an LC, the bank will upfront a bit. That later comes in inventory. At that moment, the upfronting percentage of the bank changes a bit again. And then later you have receivables, where often things like either trade credit insurance or factoring linking the financing in as well come in. And then you have the whole chain. In that moment, you already have 3 trade finance or trade finance related products just to obtain one objective, which is financing.
Yeah, and that already shows the complexity of everything, and next to, of course, your expertise. Based upon also what your input there, I always assumed that the connection to or the communication with banks and colleagues in non-treasury or non-finance field will be the bottleneck. But our research shows that the perceived bottlenecks are much more in the actual processes and in the compliance and all related. So I know you speak with many companies about this. Do you have some telling examples of these process frustrations?
Yeah, too many to be true. So maybe just picking up on one point that Eddy said, right? So I guess we all see the industry is moving. So Eddy, when you said you stay away from letters of credit, that already is a learning, because the letter of credit process is too cumbersome to be worthwhile going through. Now and that's a trend that we see in the industry, right? The absolute number of letters of credit in the industry is going down, full stop. Now we are still with a lot of guarantees, and still that process, and Niki, you mentioned, right, 3 instruments that you need to get one deal done. The guarantee process itself is still very cumbersome. And let me pick one example, a real example, right, where it took 4 weeks from application to actual issuance of the guarantee being available with the beneficiary. And that's where the guarantee needs to be in the end, right? And just highlighting the individual steps, not talking about the need to have communication within an organization, i.e. aligning the sales department, the internal trade finance or treasury experts, and eventually the legal department. That comes on top. But the minute the application is sent to the bank, right? One corporate told us that they filled in the application in an online portal of the bank. Then for whatever reason, the bank came back saying that I need signatures. So please print out that one and have it physically signed. Where you start wondering, why is there a portal in the first place? And again, it was real. So they printed out the form that they filled in the online request, had physical signatures, then sent it via post to the bank. Bank came back and said, oh, one of the signatures we don't know, because yes, there was a change at the corporate, right? One person changed the department, and now internally in the corporate, he has the right to sign. The bank said, I don't have the physical signature specimen, so can you please update the physical signature specimen? So that took time. Then the bank had all they needed. It took them 10 working days to actually issue the guarantee. And while the application said, please send directly to the beneficiary, the actual guarantee, because that was the bank rule, was sent to the applicant. So then the applicant, not expecting that physical guarantee, opened the post and had to send it to the beneficiary. Now, you may argue that is an extreme example. And yes, that is an extreme example, but it is real. I didn't make up a single step in this. And it shows that the way the processes are designed today, they're just open for mishaps. Yeah. So if we step back and say, how would we design a process given current technology, right? We design a process that uses a platform that's open for collaboration, where basically you can streamline that and you make information available to all the parties immediately. And I guess another big step, and that's a change that we see in the industry, that signature process. Why don't we agree on a corporate to corporate approval level? So the bank, if everyone uses the platform, right, can rely on the corporate will make sure that internal approval rules are adhered to. Mm. And we know from talking to corporates, and I guess Niki and Eddy, you can confirm that sometimes a corporate just says, hey, the maker can send it directly. The risk is so minimal to the corporate, I don't need second signature. Then in other cases, depending on currency, value, runtime of that guarantee, you may want to have 3 or 4 pair of signatures on it. The corporate will manage. Why should the bank care, to be frank? Right? Yeah. And so this is the change in the industry that we're saying. So ultimately, we should get to a state where same-day issuance should be the rule rather than the exception.
Yeah. Your vision is I think something a lot of people are looking for. To make it also a bit more specific for Vanderlande, going back to you, Eddy, before we go in how it is, can you describe how it was when you entered Vanderlande about 7 years ago?
Yeah, well, I think because of the treasury team within Vanderlande is just 4 persons. Right? We do 2.1 billion in turnover, euros, but we are 4 persons in treasury. So we cannot, in terms of the guarantee issuance process, we are not equipped to handle all those guarantees. So basically the data providing is done by our controllers, our sales controllers that are, in the project next to the sales manager. And then, of course, we approve, we check for a sanity check, and then we sometimes with blue wet ink, we need to sign and then send it to the bank. And we also do some of the portfolio, the banking wallet. So sometimes we send guarantees to bank X or Y or Z just to keep everybody happy. So 7 years ago, I think up until 2 years ago, for a controller that only does a guarantee issuance maybe once or twice a year, it was stressful. It was very stressful. So they had to. So once a controller was able to get a guarantee issued through a bank, they tended to stick to that bank because they knew the persons involved, they knew the application form, and then they stick to that, even if the pricing or the capabilities of a certain bank in a certain country were better than the bank that he or she worked with. What you now see with with the procedure that we are implementing, thanks to Surecomp, is that the application form is always the same. And you're independent of which bank you are going to use. So it enables us as Treasury to do the portfolio management a lot better. But it also creates a lot of ease at the controllers because once they have entered one guarantee in the system, they can do all. So it's really frictionless, which was also, I think, #1 in our decision-making list was to make life of the controller as frictionless as possible.
Yeah, and I think we'll walk this path further in this session, but I want to take one side step and go to Niki as to the approach to risk, because what's interesting, what Eddy mentions is that the choice in supplier, in banks or in is not dependent on the best solution offered, but at the easiest process. But if you take a kind of your holistic view on risk mitigation, and you envision your Vanderlande as a company, would it be an option to choose for other risk mitigation solutions, or is this unavoidable what's happening?
So I think at the root, what Eddy's saying, you have two people working with two different objectives, right? The controller just wants to get at issues as fast as possible, and the treasurer, they want to look at, giving the banks a piece of the pie. They want to look at the pricing. They look at the risk level of the bank, right? Because I've been in the situation working for a company which had a much better CDS, for instance, than any bank. And in that case, you're really wondering why you are paying the bank. However, in the end, you're going to have to bring those two things together, because it's also completely understandable why a controller just wants to get it done. So, yeah, I would say exactly what Eddy is saying is the right way to approach this, to make it very easy to enter and look at the strategic side. So which banks to use, the negotiations, all of that to the treasurer. Where it becomes a bit difficult is with the legal part, the wording, etc. Because that's really then another partner, let's say a legal person, might come into play. And I think that's the part where you want to spend the most time on, to make it efficient and straight through, and to have as less of variances as possible on that part of the trajectory.
Yeah, that makes quite a complex equation with very many variables. So I know you worked at McKinsey, so I suppose you're smart. So if you have the legal and what is mentioned by Niki, and you've got the organizational, which is mentioned by Eddy, because hey, controllers have to take their part. So there's an organizational part, but there's also a technology part. It's TMSs, it's ERPs, it's Excel. Can you help us in this complex equation? What's your vision? What would be the right order? How can you analyze as a group treasurer who wants to streamline this process? Where do you start?
I'll make it, taking your comment about what's the smartest thing to do for a vendor. And to be frank, we engage heavily with our users. So Eddy is part of our design partner group. And this, to me, as vendor, is the most valuable source of insights, because there's nothing better than listen to the actual user to know where to focus on. Now, you mentioned a number of topics that we are actually focusing on. Maybe let's start with the text, right? Trying to streamline the text is something that wouldn't have been possible a few years ago, but now with the evolvement of large language models like ChatGPT is using, we actually can imagine applying those systems to have a support in assessing a text, whether or not a typical corporate would be in a position to accept that. And it's very fresh. We're starting to work on that to try to enable, and I say try because it's super new, try to enable the corporates and the banks to have a first round assessment on the text to say, hey, there's 28 clauses in that text, 22 seem to be acceptable, focus your review on the 6 that seem to be requiring some review, right? So we're just trying to bring efficiency also in that space. But to the other side of your question, to say, hey, there's so many systems like the treasury management system and ERP system. And so sometimes we're asked, right, hey, Enno from Surecomp, who's your biggest competitor, right? And the honest answer is it's Microsoft, because the vast majority of corporates out there is using a combination of Outlook, PowerPoint, and Excel to manage guarantees, right? So you have the list of guarantees in your Excel. If corporate finance wants to have a report, you use PowerPoint, and communication with your financial institutions done in Outlook. So it's a fully streamlined, integrated MS Office solution. Now, halfway kidding, right? We all know the deficiencies of that. So we do bring solutions in all three dimensions, right? So the core of where we think we need to bring a solution is the management piece. So, right, replacing Excel, enabling each user according to the user level and clearly according to the role to get a proper overview, including the reporting piece to enable like end of quarter or end of month reporting to be streamlined with the downstream requests to that. The full communication with the financial institutions, digital communication, enabling that at least ambition of same-day issuance. But also for those corporates that start or end the process of the guarantee in the ERP system or a TMS system, right? And to be frank, not all of them do. It's again, from the feedback that we get from our design partners, some say, hey, we just don't. We have large projects where everyone is aware of what needs to be done, no need to connect technically to an ERP system. Yet others say, well, our process starts with the purchase order and ends with the update back to the ERP to say, yes, guarantee has been issued, you can proceed. So it's very diverse on the set of requirements, which ultimately brings the need to our solutions to be open in a technical manner, as you questioned, right? To enable everyone or every corporate individually to say, I'm using a TMS system from provider A. Can we please connect? Our answer will always be yes. The data belongs to the user and we can connect the systems. And we need to be having a workflow within our solutions that is flexible enough to adjust to the workflow of the user. And this is not the same across 10 organizations, right? You'll find, and again, right, where you might think, hey, a guarantee is a guarantee and a payment guarantee is a payment guarantee and a performance guarantee is a performance guarantee. Yes, on the level of the instrument, that's true. But the way how it's treated within each corporate differs according to the business of the corporate, right? And so I take our responsibility of if we can enable the corporate to focus on its business, that's best we can do, right? And that requires to have kind of flexible systems.
Well, let's go then back to the corporate, Vanderlande. Eddy, it sounds like Surecomp has, if they have 1,000 clients, they have 1,000 systems, which most likely is not the case in their
No.
approach.
We wouldn't have done our job if we had 1,000 systems.
but can you take us through some milestones, highlights that you said, well, okay, now we are really making improvement. For instance, taking tasks away from controllers or taking them out of the equation or any. What's the order of things? What happened with your company?
Well, we first we had to convince our finance design board, as it is called, to do the investment. So my group treasurer and myself, we had a lengthy process in selecting what ultimately was Surecomp. However, our CFO used to be a controller in the airport business. So when we described the thing that we were trying to solve, to make the process as frictionless as possible, she immediately knew that what we were talking about, and basically we got her approval before anyone else's.
Right.
So also in terms of so what could you call it a milestone? Any controller that I sit next to walking through the guarantee issuance process for the first time, I get responses like, oh, we should have had this 10 years ago. But if this is possible, then can we also do this? Can we also do that? So I think for me, that's already the milestone because we hit the right spot.
Yeah, you made them happy.
Yeah.
Yeah. And was that already, let's say, done deal? Then now we're fine, or did you then also move forward and then said, okay, now we are checking out cost or the number of banks?
We did that before.
Okay.
So selection process. We also looked at the cost of the various solutions. But to be honest, I mean, we sometimes have pretty large guarantees, let's say guarantees of over 50 million. If you can save 15 basis points on a guarantee issuance of 50 million euros for a period of 3 years, I think I already got my subscription fee from Surecomp back.
Yeah. True. Get that. And did you change the primary the existing process because the controller is quite prominent? Okay, you kept the process. Yeah.
Yeah. If you look at our process map, which we do have, the process has not changed. We do have the API to link Surecomp to our treasury management system in a future stage. That might change the process, actually take away something of the controller to do, which is to update also the treasury management system. So that might be a change in the future. But for now, the process is unchanged. It only has better tooling.
Yeah, great. And I stick with you because we got a question from Dennis. He asks how many parties or banks are you using for trade finance, and can you take us through the selection process? There's also a question for Niki in how many banks do you do this regional? Do you do this cost based? How do you select your suppliers?
That's a good question. Yeah, well, in the Netherlands from headquarter level we have a facility with 7 banks. So we have a working capital facility and we have a guarantee facility with those 7 banks. We also have customer centers worldwide that some of them have their own banks where they do business with. So I think in total we're talking about 16 or 17 banks. So that is also was also a challenge for Enno because we have units that can either demand issuance of a guarantee at their own bank in their own country, or if the lines are full or for whatever reason, they can use the lines of headquarters in the Netherlands. So you know, it's a flexible process, but that also means that the tool has to be flexible.
Yeah, and also going to you, Niki, because you've also seen many companies and many suppliers. What do you see happening in selection processes of banks and other suppliers in trade finance?
Yeah, it really depends on the business you're in, because at Vanderlande, they tend to issue quite high guarantees. So if you're like in the oil business and you want to fill up a tanker, you need facilities everywhere, right? And they need to be, you know, manageable. But if I've also worked at larger corporates who very rarely issued guarantees or LCs, so it was completely out of policy in terms of the total amount of business with banks. It was such a small percentages. You know, if you have a good credit rating and you're not so worried about the relation with the bank, maybe the bank is also buying from you at that moment. You know, one bank and perhaps a backup might be enough in case there's a problem in a certain country. Where it gets a bit tricky though, when the customers often actually have a request on which bank to use, and then it gets a bit tricky to set up a one-off facility because a customer wants something. You know, in my perspective, that's a complete waste of time, but you don't really have an alternative then. And one thing to always consider is, and Eddy also rightfully pointed this out, you have to look at your own credit versus the bank's credit and really wonder or negotiate what you're actually paying for.
Yeah. Is that yeah, sorry,
maybe just
Enno?
adding from my perspective, say with an upfront comment, I may have an adverse selected perception because we may only see those corporates that deal with more banks, and the corporates that deal with less banks don't yet use professional systems. But say 2 aspects. There are corporates out there that deal with far more financial institutions than the, say, 20 that Eddy mentioned. And I mean a dimension more. So we have corporates that deal with more than 200 financial institutions across their portfolio. We're talking multinational giants, and still part of the reason is because of their global operations. As Niki pointed out, it's sometimes not the corporate that is deciding who they do business with, but their business counterparts are friendly inviting them to do business with one of their preferred financial institutions. Second, depending on the business that these corporates are in and the regional coverage, say odd countries or odd currencies used in these countries, you don't have a choice, right? You need to deal with those financial institutions that provide coverage for that currency in that country. So sometimes you have little choice. The second big trend that we're observing in the industry is the number of financial institutions is going down. So the corporates are actively putting effort in streamlining their FI portfolio use because it's too cumbersome, too complex to manage and keep up to date and have an eye on the ratings, on the prices that are agreed upon and on the overall process. Right?
And it might also have to do with what's happening in the market, that a number of suppliers or a number of banks are stopping with trade finance. The number of people working in trade finance with banks in the Netherlands is going down. That's my personal observation there.
Absolutely.
And the knowledge is also going down.
Yeah.
Part of that could also just be the simple fact that if you have a lot of finance or a lot of trade finance partners issuing guarantees, etc., you need a single source of truth. That might be a reason if you don't have that many partners to try to reduce it, because if you only have one partner, whatever they say is the source of truth. So that makes things a lot easier. And to get to that benefit on taking off a few points, having 3 or 5 partners might not make sense. But if you go above that, you have to make damn sure that you do have that one source of truth and everything comes together and that it's flawless.
Yeah. True. That leads me to the question is it's a balancing act, and sometimes you are not at liberty to choose, but we had some previous webinars amongst others with TIS and other payment service providers, and it was all about APIs and all about connectivity. Enno, can you perhaps tell a bit, open the hood of your machine? Is Surecomp also connecting so many providers through APIs and streamlining that way? Because if you have standard payments, it's standard banks, but in trade finance you have many more processes and many more suppliers. So can you tell us a bit about that?
More than happy. I guess to start with the payment space, I guess the willingness and technical ability to go API, say in Europe, has tremendously increased with PSD2. To be frank, the ECB simply said every bank has to implement APIs, the 3 levels of access to account, full stop. So the banks had no choice. All of a sudden, the banks put it into their internal priority list. Well, I better be compliant to PSD2. And then all of a sudden, corporates were enjoying that ability to call via an API any account that they had in the European Union. It's a complete different picture on the trade finance space. There are no API standards, full stop. It's just not existing. So while we consider ourselves to be the leading provider of trade finance systems on the back end of banks, and in some markets in Europe, we are the only / the predominant provider, still there's no standard in the trade finance space. So we are providing connectivity through the tracks that we can make available, right? Because we have the banks that use our systems. Clearly, we can connect those relatively straightforward. I say relatively because often enough these systems are installed on-prem at the bank side. So it's a bit of an effort for the bank to connect to our systems, but it's the same provider on both ends, so it makes it relatively simple. To connect to those financial institutions that are not using Surecomp systems, and Eddy, to be frank, doesn't care whether the bank is using a Surecomp system or not. It's none of his interest. So the value proposition must be the system can be connected to any financial institution, bank, insurance company, who's also issuing a lot of guarantees. And therefore, our technology is truly based on microservices, API first, and we can go to any level of depth. It's open design. It's open design. We offer a range of connectivity. One of them is APIs. And depending on the ability of the bank and the system that the bank is using, some are connecting API, some are connecting host to host, some are connecting file exchange. It's a range of different types, all with the intention, again, similar to having the controller use a standard process for applying for a guarantee. In the end, the corporates don't really care how the bank or the FI is connected as long as it works, right? And to that part, we take care. Hey, and you don't need to care. We make it happen.
Yeah. Okay. That's the spirit. Clients like. Yeah. We now the questions are flowing in, and I'm trying to juggle because we have under 10 minutes for this session. So I've got two questions. I think one about Swift. Perhaps it's best still with you, Enno, about could you use Swift messages for most trade products? Is that a solution, Patrick Koentraus?
So that say Swift score is one of these channels that we support, and that's what I meant, right? This is, in the end, it's file exchange. It's a structured file. However, it requires the corporates to be a Swift member, and it incurs a special cost per transaction. And if we think modern data exchange, you want to have the documents. So some banks require, going back to the compliance issue being the second most cumbersome topic for corporates to consider when doing banks are requiring more information in order to issue the guarantee. So you need to provide more information in the application process. So you may want to add the purchase order or whatever you have to confirm that I am requesting that guarantee for business purpose. If you add an attachment to the Swift communication, costs go skyrocket. So this is just the reality. And therefore, yes, that is an option. It's not exactly the option that we openly promote because of the deficiencies that there are, right? Now, maybe, and I don't know whether that was the background for the question. Last week, the ICC and Swift announced a standard for us, or a new format, let's not call it standard yet, a new format for a guarantee API. Yet has to be proven whether that will become the new standard in the market. So far, it is yet still linked to having a Swift account and going through Swift, so the same cost structure will apply. We are committed to implement standards because that's the only way we can foster open communication. I mean standards, not every format that is proposed has the power to become a standard. Once it's a standard, we'll apply and add it as yet another communication channel that our parties will have available. And I hope the question was answered because I don't know exactly whether that hit the nail.
I tried to summarize. There was quite a long question, so I put it in keywords. I have the last question for the audience, and then we go to our wrap-up visionary question round. And it's also from the audience, Eddy. Trade finance is decentralized. There's a lot of responsibilities with the controllers, but you've got your credit lines, you've got your policies. How do you get a grip on what's happening out there, and do you control? Are you really the boss of the process? Are you a supporter? How does it work for Vanderlande?
That's a question that I wouldn't say trade finance is decentralized. I would rather say that the controller has the responsibility for the accuracy of the data.
Okay.
Then in the old days, but also using Surecomp's Revo solution, we basically everything goes through treasury. And we also created a treasury to determine bank. So if the controller doesn't choose upfront which bank to use, either demanded by the customer or for whatever reason, they can choose the treasury to determine bank. And then treasury, once we get the issuance request, we then determine the bank.
Yeah. So it's not decentralized at all. You're the boss. Very well.
Well, the providing of the data is decentralized, but the rest of the process is centralized.
Yeah.
So I don't know how to summarize that.
Yeah. I get you. we are already at 11, and I am also looking for some input as to the future. And I would like to start there with Niki, because you have this holistic approach towards risk, and I think a lot is happening organizational, in the market, technology. So what do you see happening in the next years, decade or so?
Yeah, so I think we have three things, which two we pretty much covered on. One is that you're adding intelligence and following corporate workflows in the systems, which I think is very important. And the one which is really on the 10-year horizon, let's say, which I think will have the biggest impact, and without using it as a buzzword, it's ESG. And let me explain my thinking a bit.
Okay.
Because banks, from a regulatory perspective and also from a marketing perspective, are forced to do something with it. And the logical place where it touches the customer is in their supply chain. If you expand that and you look at those ESG risks, let's say, where you say, if you're not very environmental friendly, there is a risk because you might get some bad marketing or might get in trouble from a regulator, and your business is going down, and going in the opposite direction. If you're very environmentally friendly, and I'm exaggerating a bit, your credit actually goes down. And why that's important for the doing business with a bank, but for the corporates as well, is my hunch it's going to have quite a big impact on the actual cost or the pricing you're going to obtain, because I really see banks taking that into their risk model. And as you know, with all of these types of products we're discussing, a big element is the credit risk in the bank that the bank is pricing to the corporate.
Mm-hmm.
And I think there will be a very big ESG financial impact.
Oh, wow. Okay. To be honest, I didn't see that one coming, so that's food for thought. So, Eddy, some final remarks, tips and tricks, or expectations?
Well, I think what we have done in the past with our treasury management system, we are recreating now with the guarantee process with Surecomp. And I think what we are typically seeing is it's not just the ERP system that provides, which is the big container that everybody's working with, but you see all these applications that have APIs that work together to create the added value for controllers, for our CFO to have valuable insights in where the company is going, how can we save some money, the ESG, the ESG ratings that are also part of the discussions with the banks. But I'm pretty, how do you say that? I'm pretty happy to live in an age where the fox is actually out now, and I'm still signing with wet ink. I still do, unfortunately, but I'm living in an age where a lot of smart systems work together and create value for us as a corporate as well in doing our business in a more frictionless way.
Yep, great. And Enno, you had some time, and as one of the hosts, the final input is yours.
No, I guess input question. I take a lot of input myself from these type of discussions, and also from today, especially that risk factor is something that we don't typically have in the forefront of the discussions we have. But I guess summarizing, the industry out there is moving, right? And as Eddy said, where you start with the ERP system, then you add the TMS system, and then you add specialized system like a trade finance system. And that's what we are seeing. There is an increasing demand from corporates for specialized solutions. Why? For, say, very, in parentheses, old school efficiency gain motivations. You want to gain efficiency. One of the topics, and it hasn't been, top line of our discussion, but it has been mentioned, the knowledge is going down. The number of people who are real trade finance experts is decreasing. So you need to somehow replace that risk of not having an expert in all of your locations and all of your teams by having more robust processes, by using tools that basically enforce a process and make it easy for the younger members of the teams to join that process and gain knowledge. So this is also an element that we must take into consideration. And then I guess the last big dimension is connecting the data points. So the more we get away from paper and the more data we are using, the easier it becomes not only to create transparency and be able to easily report, but, and as Niki said, to add new functionalities or to serve new purposes to gain new insights. And ESG is one of them. Right.
Yeah.
And whatever the parties, and it may be the banks or maybe the corporate counterparts, need as information, the minute you work on data, it's easy to provide it, or with an open solution to add it the next day. Right. And so that would be for me the summary that we need to change.
We need another session.
And eventually.
not enough time, so much to discuss. So thank you all for all this input. Thank you, Niki, and of course Eddy, Enno. Thank you, Surecomp and TreasuryXL for organizing. I'm inspired, and I was really surprised by some input. So I hope to see the audience again in future sessions with us or other experts in the TreasuryXL community. So see you out there, and subscribe, and see you out there. Thank you.
Thank you. It was a pleasure. Bye-bye.